Welcome to the Real Success Lab. I'm sure you've heard the news. The headlines screamed doom. Bitcoin plummeted, Ethereum crashed. The year was 2022 and the crypto market was in free fall. News outlets pronounced the end of crypto, painting a picture of widespread failure. Social media echoed with tales of fortunes lost, dreams shattered. However, a core group of investors remained undeterred. They recognized the transformative power of blockchain technology. The crash was not the end, but the beginning of a new chapter for crypto. To understand crypto's true potential, move beyond sensational headlines and examine the technology. Blockchain offers transparency, security, and immutability. Myths about crypto being complex or illicit persist. It's time to separate fact from fiction. Crypto is evolving, addressing challenges and expanding possibilities. The crypto landscape of 2025 is vastly different from the speculative frenzy of years past. The market has matured, focusing on utility and real-world applications. Investors are exploring diverse projects leveraging blockchain technology. Staking and stablecoins offer new ways to earn and transact. Tokenization is revolutionizing industries, enabling fractional ownership. This is crypto with a purpose, driven by innovation. Don't forget to subscribe. So what does this all mean for you? Is your crypto strategy extinct, a relic of a bygone era? Or are there still opportunities to thrive in this evolving landscape? The answer, as with most things in life, is nuanced. The crypto market remains volatile, and risks abound. However, amidst the uncertainty, lies immense potential for those willing to adapt and evolve. This is not about chasing the next Bitcoin or falling prey to get-rich-quick schemes. It's about understanding the underlying technology, identifying promising projects, and approaching investments with a long-term perspective. In the following sections, we'll delve deeper into the world of crypto in 2025. We'll debunk common myths, explore how savvy investors are profiting in this new landscape, and equip you with the knowledge to navigate this exciting and ever-evolving space. Whether you're a seasoned crypto enthusiast or a curious newcomer, this guide will provide valuable insights to help you navigate the future of finance. The early days of crypto were filled with stories of ordinary people becoming millionaires overnight. Bitcoin soared to dizzying heights, minting fortunes for early adopters. These tales created an illusion of easy money, drawing in speculators. The get-rich-quick mentality fueled a culture of hype and speculation. Investors, blinded by quick profits, poured money into obscure projects. Social media amplified this frenzy with dubious investment advice. However, the music eventually stops. The 2022 crash shattered the myth of effortless wealth. Those driven by FOMO saw their investments evaporate overnight. The dream of becoming a crypto millionaire turned into a nightmare. Sustainable wealth requires patience, research, and a long-term perspective. The days of getting rich overnight are long gone. Success in crypto belongs to those with a sober mindset. Crypto is not just Bitcoin. Bitcoin is the most well-known, but it's just the tip of the iceberg. The crypto ecosystem is vast, with thousands of cryptocurrencies. Ethereum enables decentralized applications like DeFi and NFTs. Stablecoins offer less volatile alternatives for transactions. The crypto space is constantly evolving. Diversification is key for smart investors. Explore different cryptocurrencies and blockchain projects. One of the initial appeals of Bitcoin was the promise of anonymity. Transactions on the Bitcoin blockchain are pseudonymous, recorded using public keys rather than personal information. However, this perception of anonymity is largely a myth. Law enforcement and blockchain analysis firms can track and trace the flow of funds. True anonymity in cryptocurrencies is elusive. Critics argue cryptocurrency has no intrinsic value. Unlike traditional currencies, cryptocurrencies are digital assets with no physical form. Some believe crypto is a speculative bubble destined to collapse. However, their value lies in their underlying technology and utility. Blockchain offers transparency, security, and immutability. Cryptocurrencies derive value from their network effects. The more people use a cryptocurrency, the more valuable it becomes. Decentralized nature offers faster transactions, lower fees, and greater accessibility. Cryptocurrencies have the potential to revolutionize finance. As blockchain technology gains recognition, demand for cryptocurrencies will grow. To truly grasp the potential of crypto, one must look beyond the price of Bitcoin and understand the revolutionary technology that underpins it: blockchain. This ingenious system for recording and verifying transactions is transforming how we think about trust, security, and the very nature of value. Imagine a digital ledger distributed across a network of computers where every transaction is recorded and verified by multiple parties. This decentralized structure eliminates the need for intermediaries like banks, reducing costs and increasing efficiency. The transparency of the blockchain ensures that all transactions are visible to everyone, promoting accountability and reducing the risk of fraud. Furthermore, once a transaction is added to the blockchain, it cannot be altered or deleted, ensuring data integrity and immutability. This feature makes blockchain technology ideal for a wide range of applications beyond just financial transactions, including supply chain management, digital identity, voting systems, and more. The true value of crypto lies in its potential to disrupt traditional industries, empower individuals, and create a more equitable and efficient global economy. As we delve deeper into the world of crypto in the following sections, we'll explore how savvy investors are leveraging blockchain technology to generate profits and position themselves for success in this exciting new era of finance. To truly grasp the potential of crypto, one must look beyond the price of Bitcoin and understand the revolutionary technology that underpins it: blockchain. This ingenious system for recording and verifying transactions is transforming how we think about trust, security, and the very nature of value. Imagine a digital ledger distributed across a network of computers where every transaction is recorded and verified by multiple parties. This decentralized structure eliminates the need for intermediaries like banks, reducing costs and increasing efficiency. The transparency of the blockchain ensures that all transactions are visible to everyone, promoting accountability and reducing the risk of fraud. Furthermore, once a transaction is added to the blockchain, it cannot be altered or deleted, ensuring data integrity and immutability. This feature makes blockchain technology ideal for a wide range of applications beyond just financial transactions, including supply chain management, digital identity, voting systems, and more. The true value of crypto lies in its potential to disrupt traditional industries, empower individuals, and create a more equitable and efficient global economy. As we delve deeper into the world of crypto in the following sections, we'll explore how savvy investors are leveraging blockchain technology to generate profits and position themselves for success in this exciting new era of finance. Remember the days of earning a paltry interest rate on your savings account? Those days are fading fast, thanks to the innovative world of cryptocurrency staking. In essence, staking allows you to earn rewards simply by holding certain cryptocurrencies. It's like earning interest, but instead of a bank, you're supporting a blockchain network. Imagine a network of computers working together to validate transactions and secure a blockchain. Staking involves committing your crypto assets to support this network. By doing so, you become a validator, and in return for your contribution, you earn rewards in the form of additional cryptocurrency. Think of it like owning a piece of real estate that generates rental income. Your staked crypto is your property, and the rewards you earn are your rent payments. The more you stake, the more you can potentially earn. It's a passive income stream, allowing your crypto holdings to work for you while you sleep. Staking is not without its nuances, of course. Different blockchains have different staking mechanisms, reward structures, and risks involved. It's essential to conduct thorough research, Understand the specific requirements of each platform and choose a reputable staking provider. Subscribe for more insights. One of the biggest hurdles to mainstream crypto adoption has been the volatility of cryptocurrencies. Enter stablecoins, designed to address this issue by pegging their value to reserve assets like fiat currency or gold. They offer the stability of traditional currencies and the efficiency of blockchain technology. Imagine a digital dollar on the blockchain, providing fast transactions and low fees without price volatility. One of the most exciting applications of blockchain technology is tokenization, the process of representing real-world assets digitally on a blockchain. This revolutionary concept has the potential to transform industries ranging from art and real estate to supply chain management and beyond. Imagine owning a piece of a famous artwork or a luxury property without the hassle of traditional ownership. Tokenization makes this possible by dividing ownership of an asset into smaller, more manageable units represented by digital tokens on a blockchain. These tokens can then be traded on decentralized exchanges, providing greater liquidity and accessibility to investors. Tokenization also enables fractional ownership, allowing investors to own a portion of an asset they might not otherwise be able to afford. The implications of tokenization are far-reaching. It can unlock trillions of dollars in illiquid assets such as real estate, fine art, and collectibles, making them more accessible to a wider range of investors. Tokenization can also streamline supply chains, improve transparency in financial markets, and create new opportunities for artists and creators to monetize their work. The traditional financial system is often criticized for being opaque, centralized, and exclusionary. Decentralized finance, or DeFi, aims to address these shortcomings by leveraging blockchain technology to create a more open, transparent, and accessible financial system. DeFi encompasses a wide range of applications, including lending and borrowing platforms, decentralized exchanges, stablecoins, and more. These applications operate on decentralized blockchains, eliminating the need for intermediaries like banks and financial institutions. Imagine a world where you can borrow money directly from your peers, trade assets without a central exchange, and earn interest on your crypto holdings without a bank account. That's the promise of DeFi. It empowers individuals by giving them greater control over their finances and access to a wider range of financial services. DeFi is still in its early stages of development, and risks abound. However, the potential to disrupt traditional finance and create a more inclusive and equitable financial system is undeniable. The world of DeFi can be daunting for newcomers. With thousands of projects, complex terminology, and ever-evolving technology, it's easy to feel overwhelmed. However, with a little guidance, anyone can navigate this exciting new frontier in finance. The first step is to educate yourself about the fundamentals of DeFi. Understand the different types of DeFi applications, the risks involved, and the potential rewards. There are numerous online resources, courses, and communities dedicated to DeFi education. Once you have a basic understanding, it's time to explore the DeFi ecosystem. Start by experimenting with small amounts of capital and gradually increase your exposure as you gain experience and confidence. Remember, diversification is key. Don't put all your eggs in one basket. Most importantly, never invest more than you can afford to lose. DeFi is still a highly experimental and volatile space. Approach it with caution, do your research, and always be prepared for the unexpected. The crypto revolution is not just about making money, it's about empowering individuals and creating a more equitable and accessible financial system for all. While the path forward may be uncertain, the potential to transform the world is undeniable. Imagine a world where financial services are no longer the exclusive domain of banks and institutions. A world where individuals have greater control over their assets, access to global markets, and the ability to transact seamlessly across borders. This is the future that crypto is building. The journey won't be without its challenges. Regulation, scalability, and mainstream adoption remain significant hurdles. However, the momentum behind crypto is undeniable. As more people awaken to the transformative power of blockchain technology, The future of finance is being rewritten before our very eyes. The question is, will you be a part of it? Will you cling to the outdated strategies of the past? Or will you embrace the opportunities of this new financial era? The choice is yours. In the world of finance, the promise of guaranteed returns is often a red flag, and the crypto space is no exception. Scammers prey on the desire for quick and easy profits, luring unsuspecting investors with promises of exorbitant returns with little to no risk. If it sounds too good to be true, it probably is. These scams often take the form of Ponzi schemes, pyramid schemes, or high-yield investment programs. They typically involve recruiting new investors whose money is used to pay off earlier investors, creating the illusion of profitability. However, these schemes are unsustainable and inevitably collapse, leaving later investors with significant losses. Another common tactic is to offer guaranteed returns through trading bots or investment strategies. These claims are often accompanied by fabricated testimonials, impressive-looking charts, and promises of insider knowledge. However, the reality is that no one can guarantee profits in the volatile crypto market. Remember, investing always involves risk, and anyone claiming otherwise is likely trying to deceive you. Be wary of projects or individuals promising unrealistic returns, and always conduct thorough research before investing your hard-earned money. Social media has become a breeding ground for crypto scams, with scammers exploiting the power of social proof and influencer marketing to deceive unsuspecting investors. Be wary of projects or coins heavily promoted by social media influencers, especially those with a large following but little credibility in the crypto space. These influencers are often paid to promote projects regardless of their legitimacy or potential. They may receive free tokens, financial incentives, or other perks to endorse projects to their followers. These endorsements are often presented as unbiased opinions, but in reality, they are paid advertisements disguised as genuine recommendations. Scammers also create fake social media accounts, posing as legitimate investors or traders, to spread hype and manipulate market sentiment. They may engage in pump and dump schemes, artificially inflating the price of a coin through coordinated buying activity before selling off their holdings at a profit, leaving unsuspecting investors with losses. When evaluating crypto investment opportunities, it's crucial to look beyond the hype and conduct your own research. Don't rely solely on social media endorsements or online forums for investment advice. Instead, consult reputable sources, read project white papers, and understand the fundamentals before investing. One of the most devastating scams in the DeFi space is the rug pull. This malicious tactic involves developers creating a seemingly legitimate DeFi project, attracting investors, and then suddenly abandoning the project and making off with the funds. Rug pulls often target new and rapidly growing DeFi protocols, where liquidity is high, and security measures might not be as robust as established projects. Scammers may create a token with a catchy name and website, listed on a decentralized exchange, and even incentivize early investors with high returns to attract liquidity. Once enough capital is locked into the project, the developers remove the liquidity pool, making it impossible for investors to trade their tokens and effectively rendering them worthless. The scammers then disappear with the stolen funds, leaving investors with significant losses. To protect yourself from rug pulls, it's crucial to thoroughly vet DeFi projects before investing. Look for projects with a transparent team, audited code, and a clear roadmap. Be wary of projects with anonymous developers, unrealistic promises, and a lack of community engagement. Phishing attacks, a common tactic in the online world, are also prevalent in the crypto space. Scammers create fake websites or emails that mimic legitimate crypto platforms or services to trick users into revealing their login credentials, private keys, or other sensitive information. These fake websites or emails often look identical to the real ones, making it difficult for even experienced users to spot the difference. They may use similar domain names, logos, and branding to deceive unsuspecting victims. Once a user enters their login credentials on a phishing website or clicks on a malicious link in an email, their information is compromised and their funds are at risk. Scammers also use social media and messaging apps to spread phishing links or impersonate customer support agents. They may offer help with account issues or entice users with fake giveaways to trick them into revealing their private information. To protect yourself from phishing attacks, always double-check the URL of any website before entering your login credentials. Be wary of unsolicited emails or messages asking for your private information. Enable two-factor authentication on all your crypto accounts and never share your private keys with anyone. Section 5. Protecting yourself. Due diligence and security best practices. Navigating the crypto landscape safely requires a healthy dose of skepticism, a commitment to due diligence, and adherence to security best practices. By taking proactive steps to protect yourself, you can mitigate risks and safeguard your investments. First and foremost, conduct thorough research before investing in any crypto project. Don't rely solely on hype or social media endorsements. Read project white papers, understand the technology, and evaluate the team behind the project. Secure your crypto assets by using reputable wallets and exchanges. Hardware wallets, which store your private keys offline, offer the highest level of security. Choose exchanges with a proven track record of security and regulatory compliance. Be wary of phishing attacks and social engineering scams. Double-check website URLs, be cautious of unsolicited messages, and never share your private keys with anyone. Enable two-factor authentication on all your accounts and use strong, unique passwords. Stay informed about common scams and security threats in the crypto space. Follow reputable crypto news sources, join online communities, and educate yourself about the latest security best practices. Subscribe to stay updated. Section 6. The importance of skepticism and critical thinking. In the fast-paced and often hyped world of crypto, skepticism and critical thinking are your best defenses against scams and investment pitfalls. Don't let FOMO, fear of missing out, cloud your judgment or lead you to make rash decisions. Question everything. Don't blindly trust promises of guaranteed returns, social media endorsements, or unsolicited investment advice. If something sounds too good to be true, it probably is. Take the time to research, verify, and think critically before investing your hard-earned money. Remember that the crypto space is constantly evolving, and new scams emerge regularly. Stay vigilant, stay informed, and never let your guard down. By approaching crypto with a healthy dose of skepticism and critical thinking, you can navigate this exciting new frontier safely and confidently. Section 1. The evolution of blockchain technology. The crypto landscape of 2025 is a testament to the relentless pace of technological advancement. Blockchain, once a niche concept confined to the realm of cypherpunks and tech enthusiasts, has evolved into a powerful force driving innovation across industries. The early limitations of blockchain, such as scalability and interoperability, are being addressed with groundbreaking solutions. Layer 2 scaling solutions like state channels and rollups are enhancing transaction speeds and reducing fees, making blockchain technology more practical for everyday use. Interoperability protocols are enabling different blockchains to communicate and share data, fostering a more connected and collaborative crypto ecosystem. Moreover, the development of new consensus mechanisms, beyond the energy-intensive proof-of-work used by Bitcoin, is paving the way for more sustainable and environmentally friendly blockchain solutions. Proof-of-stake, proof-of-history, and other innovative consensus mechanisms are reducing the carbon footprint of blockchain technology, addressing a key concern for environmentally conscious investors and developers. This continuous evolution of blockchain technology is creating a fertile ground for new applications and use cases. As the technology matures and becomes more sophisticated, we can expect to see even more groundbreaking innovations emerge, blurring the lines between the physical and digital worlds. The internet as we know it is undergoing a profound transformation. Web 3, the next iteration of the internet, envisions a decentralized online experience where users have greater control over their data, identity, and online interactions. Cryptocurrencies and blockchain technology are at the heart of this revolution. Imagine a world where social media platforms are owned and governed by their users, where content creators are rewarded directly for their contributions, and where online identities are secure and self-sovereign. Web3 aims to break down the walled gardens of centralized platforms, empowering individuals and fostering a more equitable and democratic online experience. Cryptocurrencies facilitate micropayments and value transfer within Web3 ecosystems, enabling new business models and monetization strategies. Decentralized finance or DeFi protocols provide the financial infrastructure for Web3, offering lending, borrowing, and other financial services without the need for intermediaries. The transition to Web3 is a gradual process, but the momentum is undeniable. As more users and developers embrace the values of decentralization, transparency, and user empowerment, the centralized internet of the past will give way to a more open, equitable, and user-centric online experience. The global financial landscape is in a state of flux. Traditional financial systems are facing increasing pressure from technological disruption, geopolitical uncertainty, and growing demand for financial inclusion. Cryptocurrencies and blockchain technology are emerging as potential solutions to these pressing challenges. Cryptocurrencies offer a borderless and censorship-resistant alternative to traditional currencies, particularly in regions with limited access to financial services or experiencing economic instability. Stablecoins, pegged to stable assets like the US dollar, provide a hedge against inflation and currency devaluation, empowering individuals and businesses in volatile economies. Blockchain technology can enhance transparency and accountability in supply chains, track the flow of goods and funds, and combat fraud and corruption. In developing countries, blockchain-based identity systems can provide secure and verifiable digital identities to the unbanked, unlocking access to essential services and opportunities. As the world becomes increasingly interconnected and digital, cryptocurrencies and blockchain technology are poised to play a transformative role in shaping a more inclusive, equitable, and efficient global financial system. The early days of crypto were marked by regulatory uncertainty and a Wild West mentality. However, as the industry has matured and gained mainstream attention, regulators around the world have stepped up their efforts to establish clear guidelines and protect investors. While some view regulation as a threat to the decentralized ethos of crypto, others see it as a necessary step towards mainstream adoption and long-term sustainability. Clear regulatory frameworks can foster innovation by providing certainty for businesses, attract institutional investors, and protect consumers from fraud and market manipulation. The crypto industry is actively engaging with regulators to shape sensible policies that balance innovation with consumer protection. Stablecoin regulation, anti-money laundering compliance, and tax clarity are among the key areas of focus for regulators worldwide. As the regulatory landscape evolves, the crypto market is expected to mature, becoming more stable and attractive to institutional investors. This maturation process will bring both challenges and opportunities, shaping the future of finance and the role of cryptocurrencies in the global economy. The future of finance is being written in code, and cryptocurrencies and blockchain technology are the ink. While the path forward may be uncertain, one thing is clear: the financial landscape is undergoing a profound transformation, and those who embrace innovation will be best positioned to thrive. Navigating this evolving landscape requires adaptability, a willingness to learn, and a healthy dose of caution. Don't be afraid to embrace new technologies, but always do your research, understand the risks involved, and never invest more than you can afford to lose. Seek out reputable sources of information, educate yourself about the fundamentals of blockchain technology, and stay informed about the latest developments in the crypto space. Surround yourself with a community of like-minded individuals who share your passion for innovation and are committed to navigating this exciting new world together. The future of finance is filled with both risks and rewards. By approaching it with a balanced perspective, a commitment to learning, and an open mind, you can navigate this evolving landscape with confidence and position yourself for success in the years to come. The crypto revolution is more than just a technological shift. It's a cultural movement challenging the status quo and empowering individuals to take control of their financial lives. It's about creating a more equitable, transparent, and accessible financial system for all. The journey won't be without its challenges. Volatility, regulation, and mainstream adoption remain significant hurdles. However, the potential rewards are too great to ignore. Cryptocurrencies and blockchain technology have the power to disrupt traditional industries, empower individuals, and create a more just and equitable world. As we stand at the cusp of this new era, it's time to embrace the possibilities. Let's challenge the old ways of doing things, explore new frontiers, and work together to build a future where finance is no longer a tool of exclusion, but a force for good in the world. The future is decentralized. The future is crypto. The future is now. We've journeyed through the turbulent landscape of crypto, from the dizzying highs of speculative bubbles to the sobering lows of market crashes. We've debunked common myths, exposed scams lying in wait for the uninformed, and unveiled the strategies employed by savvy investors who continue to thrive in this evolving ecosystem. The era of get-rich-quick crypto is over. The naive belief that one could simply ride the coattails of Bitcoin's volatile price swings to financial freedom has been shattered. The individuals and projects clinging to this outdated mentality are destined to be swept aside as the market matures and separates hype from genuine value. But from the ashes of this bygone era arises a new chapter for crypto. This new chapter is defined by a deeper understanding of blockchain technology's transformative potential, a focus on real-world applications, and a commitment to building a more equitable and accessible financial system. It's a future where crypto isn't just about speculation, it's about innovation, utility, and empowerment. While the speculative frenzy may have subsided, crypto's fundamental value proposition remains stronger than ever. Blockchain technology, with its transparency, security, and immutability, continues to disrupt traditional industries and empower individuals in unprecedented ways. From decentralized finance, reshaping traditional financial services by cutting out intermediaries and giving individuals greater control over their assets, to the rise of Web3, building a more democratic and user-centric internet, crypto is at the forefront of a technological revolution that is reshaping the world as we know it. The tokenization of real-world assets, from art and real estate to commodities and intellectual property, is unlocking trillions of dollars in illiquid capital, making it accessible to a wider range of investors and creating new opportunities for wealth creation. Stablecoins, pegged to stable assets, are providing a haven from economic instability and enabling seamless cross-border transactions, particularly in regions underserved by traditional financial institutions. Crypto's value proposition isn't about chasing the next Bitcoin or falling prey to get-rich-quick schemes. It's about recognizing the transformative potential of this technology and positioning yourself to benefit from the myriad opportunities it presents. So, where does this leave you? The investor seeking to navigate the complex world of crypto? The answer lies in embracing a mindset of continuous learning, prudent risk management, and unwavering due diligence. The crypto landscape is constantly evolving. New projects, technologies, and trends emerge at a dizzying pace. Resting on your laurels and assuming yesterday's knowledge will suffice tomorrow is a recipe for failure. Engage in continuous learning, stay informed about the latest developments, and be willing to adapt your strategies as the market evolves. Remember, every investment involves risk, and crypto is no exception. The volatility inherent in this emerging asset class demands a disciplined approach to risk management. Never invest more than you can afford to lose. Diversify your portfolio across different asset classes, and have a clear exit strategy in place. Finally, never underestimate the importance of due diligence. The crypto space, while maturing, is still rife with scams and projects built on hype rather than substance. Thoroughly research every investment opportunity, understand the technology behind it, and be wary of promises that sound too good to be true. If something feels off, trust your instincts and walk away. Subscribe and comment below.